Welcome back. My name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, we're going to be covering a stock that is very close to my heart. This is a company that I've done multiple videos on and I've gotten a lot of great feedback on in the past. It is, of course, going to be Evolution Gaming, which is the casino games operator, not to be confused with the actual online casino gambling websites. They only strictly make the games for those casinos. And so I do want to preface this video by saying this isn't going to be exactly like a big stock analysis and focusing on the qualitative aspects. I've done 2 videos on the past. I'll link it all the way at the end of the video and in the description down below. You guys can watch it right after this one. So anyways, we have the earnings pulled up here, and actually the stock went up about 14% based off of this report. There was a couple different things going into the report that a lot of different question marks surrounding the strikes with one of their studios and that type of stuff. And actually a good friend of the show over on Twitter, Josh, his at is Invest with Value if you want to go follow him. He did a pretty decent summary of it under one of my tweets here. And so he kind of summed it up by saying there's a strike in Georgia, which there was like a pretty big expectation, like it's a big hindrance of their performance, particularly in the North America region. So that was an issue. And then additionally, we've seen a prolonged trend of revenue growth actually slowing down over time. And this is kind of what has dragged down the valuation. In the most recent quarter prior to what they just reported, so Q2, they actually reported about 13% revenue growth. So this was another thing that like continuously we are seeing a deacceleration in revenue growth. Additionally, there's always been uncertainty with the stock with the unregulated markets. So not all of their revenue is in geographies where it's 100% regulated and taxed properly, and like the laws on it aren't exactly fully fleshed out. And so there was always like a little bit of like risk with like essentially half of their revenues not really being regulated. So they could be prone to more taxation and that type of stuff, which actually has happened in the past year. They're, if you look at their tax percentage, it went from like single digits to I think it's close to like 20% or something like that. So that's actually a risk that has materialized. And in the future, it's possible that they could continue getting taxed on their winnings and that type of stuff. And then finally, this is a business with extremely high margins. They have like 60% free cash flow, operating margins, 100% gross margins. That's going to attract some competition in the space. And at the end of the day, even though they have a moat based off of scale economies, a well-capitalized casino could potentially, in theory, come in and kind of undercut them or to some extent cut them out of the value chain and that type of stuff. So anyways, this was the summary by my friend over here, Invest with Value. You guys should check out his page. He posts great content. But speaking more towards the actual quarterly report, I could go through this in 18-page document and kind of just like monologue style read it to you. Instead, what I did to kind of save us a little bit of time, I went over to finchat.io and I essentially just asked it, I said, can you give me a summary of what happened in Evolution Gaming's Q3 2024? And it gave us bullet point style the most important things that it was able to identify. This is kind of like a Copilot feature that is actually, it works off of ChatGPT, but it's specifically trained on all types of earnings call data, transcripts, all that type of stuff. And so it's able to pull this type of current information literally as soon as it becomes available. And so what the Copilot was able to tell us is management highlighted that they're currently working on expansions and acquisitions to expand the global network of live studios. This is something they've been doing for years. No surprises there. They probably mention that every single quarter. Additionally, this is the operational challenges with the Georgia studio that was mentioned by Josh. This quarter faced disruptions at the studio in Georgia due to the union strike and increased cyber attacks impacting the Asian video distribution. These factors negatively impacted revenue and costs. And then sources here to Martin. I believe this guy's probably the CEO or CFO, something like that. And so there's a comment from him there. In terms of financial performance, the revenue grew 15% year over year. I believe this is on a rolling period, not quarter over last year's quarter. So keep that in mind. Live revenue grew 16% and RNG 8.5%, which honestly isn't too bad. If you didn't know the RNG part of the business, I think there's a graph down here that would better visualize that. I think this one, yeah. So this is it's kind of what it looks like. 86% of the business is actually like the live games that they're able to sell to these. So literally, like there's a video stream of you of a dealer on the other side of the monitor that is dealing out these cards as you're kind of like gambling. And then 14% of the revenues, this is the narrow moat part of the business, is the RNG. So this is essentially just like algorithms and that type of stuff and simulations of like, for example, the online slots machines and that type of stuff. So it's RNG stands for random number generator, and so that's that side of the business. This is way more commoditized. It's been a slow growing and small part of the business, so we don't really talk about it usually when we cover it on the channel here. Other than that, they kind of just said that they continue to recruit and increase headcounts, and they're working on new studios to compensate for the fact that the Georgia one is disrupted with strikes and that type of stuff. And additionally, they mentioned that they continue to invest heavily in game development. Again, if you've been following the stock, that's been something that's massive for this company, focusing on launching new games other than the core Baccarat and poker, blackjack, all that type of stuff, making like these crazy extravagant games, like the spinny ones and all that type of stuff, right? And if you were curious about the Georgia and like how exactly is it disrupting the business, I literally asked it. I said, what did management say about the Georgia disruptions? And so again, the co-pilot was able to go through the earnings call and that type of stuff and find out that it's currently operating at about 60% of full capacity due to the strike. And actually, apparently there's been illegal actions taken by the union that is going on strike. Evolution is working towards recruiting more at the Georgia location. And actually, this is something that they've been working through for the past like 2 years with the whole Georgia strike. And eventually when they did actually go on strike, they've been kind of negotiating back and forth. And then at the bottom here, they kind of just talk about that they're working towards Brazil and Philippine locations to kind of compensate for the fact that this has been an issue for them. And so as I mentioned a little bit earlier in the video, this company has closely tracked the revenue growth of it in terms of the multiple. So the PE ratio has gone from something like close to like 100 times earnings all the way down to, as of recent, I think it was trading at like 16, maybe even less, 16 times earnings, give or take. And so as you can see on the chart that I posted over on Twitter, which by the way, you should follow me there, this company closely tracks its underlying growth rate, which intuitively makes sense. And so going into this quarter, this is something that I was probably looking forward, or not really looking forward, but I was looking to see the most out of everything. And so this is the updated chart as of the most recent quarter. And as you can see, it actually did tick up. The total revenue growth ticked up to 26% year over year. But there is a slight caveat to this. And again, actually, I was speaking to Josh about this, and he was saying that there's a couple one-time things that happened in this quarter, so it might not be too accurate of a look. Actually, apologies for me. That was on a rolling period. So in this quarter, it grew 35% compared to the 13 in the quarter prior to that. But again, apparently there were some underlying one-time things, and it's roughly like a 16% revenue growth rate if you adjust those things out. But nonetheless, you're looking at 16% growth for a 14 PE business. I think that's more than appropriate in terms of valuation for that amount of growth. Not to mention the 60% operating margins, all that type of stuff. Most of the other metrics were completely in line. And then I know that it didn't happen this quarter, but another thing that's been highly important for this business has always been the number of tables that they have, if you will. So, of course, if you're playing, for example, blackjack or whatever, there's a person on the other side of the screen that's playing and dealing on the table and that type of stuff. And so this has been a KPI that they've been tracking for us, but they only report it every Q4. And so we just had the Q3 report. So we'll find out whether or not, with the new expansions and that type of stuff, the growth rate for this KPI will continue into the future. As of the last time that it was reported to us, it was growing at about 20%. I'd probably expect a small slowdown to this number, but nonetheless, it's something that we got to look out in the future. With that being said, to summarize kind of everything that was said, they had these Georgia disruptions that really hampered their growth and just their operations as a whole. The unregulated markets continues to be a risk factor for this business, and they're getting taxed more on their winnings and that type of stuff. And then in terms of growth, we did see a slight reacceleration, so that's a positive catalyst for this business. But it's a little bit misleading compared to the 36% or whatever it was that we just saw a second ago. And so what am I going to be doing? With my personal portfolio? If you guys go over to my Twitter, you could always see the most current version of my portfolio pinned in the bio, pinned at the top of my page. And so as of October 17th, the weightings haven't really moved much, but I have roughly 7.5% cash position. But you might notice something about my portfolio. I like to put concentrated bets into very predictable, wide moat businesses. Even though Evolution Gaming, and again, I'm gonna point you to the video that I made on it a couple months back, it does probably have a pretty wide moat. It misses on the predictability factor for me, the fact that they have 50% of their revenues unregulated, add on the fact that they are facing strikes in the Georgia location. I think that adds a little bit of extra risk that I personally don't want to carry in my portfolio. Even though the metrics line up, even though it's a decent valuation and it's growing pretty well, I'm probably going to hold off for it for now. And actually another challenge that I face with that is that I'd have to own it in my old brokerage. And some of you may have known about this, but the reason I actually sold Evolution to begin with was so I could transfer it to Interactive Brokers, which is much less in terms of fees and that type of stuff. And so the problem with my old brokerage was that it was charging me an egregious amount for every single trade, and then the foreign exchange on top of that and all that type of stuff. So in theory, I guess I could buy back into Evolution Gaming, but I'd have to do it on the old brokerage, which I never closed, right? I just transferred my accounts and that type of stuff. So I guess I could buy back into the business. I just wouldn't want to own paying so much in fees and that type of stuff. You know what I mean? Have it all split up with different brokerages. It would just be too much of a hassle. With that being said, thank you very much for watching. Be sure to check out the stock analysis from a couple months ago. It's on screen now. And also, you should follow me because it costs you nothing. Have a great day.